Talking Point. I'm your host, Neeraj Shah, and the Talking Point today are the views of Mr. Amit Syngle, not just for the Asian Paint numbers, but what's happening around the business environment, cost inflation, logistical issues, and demand, most importantly. Mr. Syngle, great having you. Thanks so much for joining in. I hope all is safe.
Yeah, good morning, Neeraj, and it's great to kind of be speaking to you on the channel.
Thank you so much, sir. Quick first question. The headline was that cost pressures are unprecedented in the last number of years, says Mr. Amit Syngle. My question to you is, can you elaborate a bit on that? And do you, in any fashion, can tell us whether it is transitory, whether you believe in some quarters, maybe in the next quarter, etc., it will cool off? Is it possible to predict that?
So overall, I think the situation has been truly unprecedented. We have never seen this kind of inflationary pressures in the last about 40 years, as I would see it to that extent. And this is not only an India trend, this is a worldwide trend in terms of what we are seeing, whether it is Asia, whether it is Europe, or whether it is US. I think this is something which basically everyone in the industry is feeling a punch in a very strong manner to that extent in terms of what's happening. And what is very different this time is that it is not kind of limited to, say, only the crude to that extent. It is kind of really spanning across a section of raw materials which kind of affect the overall industry. And coupled with that is also the fact that some of the areas like the raw material availability and the whole transition cost in terms of freight cost, whether it is the freight cost of getting the raw materials or whether it is transporting the FG across the country, I think all those costs have been really unprecedented overall to that extent. And I think given this overall inflation, what we see is that we are seeing from a quarter to quarter increase. We saw almost a 15% increase in inflation from Q4 of last year into Q1. We've seen another 6 to 7% increase into when we walked into Q2. And we are seeing a further increase of about 3% in terms of when we're walking into Q3 to that extent. So I think the whole inflation seems a little bit unabated at the moment, but we are definitely hoping that it kind of cools down as we kind of really get into the, the overall third quarter ending and the fourth quarter beginning kind of a zone to that extent as we go forward. And as I see it, I think we are taking a huge amount of measures in terms of what we can do to kind of resurrect and kind of take a look in terms of, addressing this. But I think what one we are very clear is that as an industry leader, we are committed to the consumer, we are committed to the overall demand. And I think on the medium to long run, I think the overall strategy in terms of looking at volumes, the growth, I think that will remain intact. We need not take any kind of emergency measures to kind of really resurrect only a margin scenario so fast to that extent. And I think we need to have that patience because such times will come. And therefore, you need to have confidence in terms of saying that here is an industry leader who's working very constructively, not only looking at the consumer, the market, but at the overall picture to see that we are getting into a profitable growth scenario.
Yeah, but Mr. Syngle, if I just do some back of the envelope math based on the numbers that you just told me, it's about a 20 to 25%, give or take a percent here and there, kind of an uptick in raw material cost inflation across. I'm not even talking about the availability. How do you deal with that? Surely it can't be a 20-25% price hike. So how do you deal with that?
Okay, great. So what's happening is that we've already taken about a 7.5% increase overall when you look at the first two quarters, the way it has kind of panned out. In addition, we have looked at a lot of measures on formulation efficiency and looking at, a very, very innovative raw material sourcing to that extent, which has kind of given us another advantage of about 2-3%, which kind of comes in because of the initiatives which are being taken there. As we look forward, I think the pace of increases in terms of the prices will go up, definitely in terms of what we see in Q3 to that extent. And also what will happen is that we are looking at very strongly focusing the product portfolio towards the premium and the luxury end so that we get higher margins, which could kind of accrue from that kind of a mix. The third area is that we look very strongly in continuing our foray in terms of the innovation in production and formulation efficiency and our manufacturing strategies in terms of what we are taking, which we feel is already given us a benefit of about 300-350 crores to that extent, and this will give us further benefits. And the last area is looking at effective cost measures in terms of what we could kind of really implement, so that we are able to kind of really balance the overall growth and still get our PBDIT in the levels of about 18-20% quickly as we kind of go ahead.
Okay, Mr. Syngle, just a couple of questions more on industry-wide, because what is happening to you would be happening to, I'm sure, all the players in the paint industry, but also for India Inc. It's not usual for us to see that both HUL and Nestle, for example, who are selling sachets, are coming out and saying that there is a rural demand issue at hand as well. Therefore, my question, one, could you tell us, for example, what was the value versus volume breakup for you in Q2? And do you reckon that if you have to take further price increases to mitigate pressures, could the volumes get impacted in any fashion whatsoever?
Okay, so yes, I think what you rightly said is that the inflationary pressures are across industry. The degree varies when it comes to food inflation versus raw material inflation with respect to chemicals and so on and so forth to that extent. How we see is that in Q2, we have grown almost by 34% by volume and about 35% by value. So the volume and the value has been much closer because we have kind of focused in terms of the premium and the luxury range in a far more stronger fashion in terms of going ahead. Having said that, the CAGRs also are in double digits over 2 years and 3 years, so which kind of just shows the entire volume trajectory of the company and the focus, which has been very, very strong with respect to driving the top lines in a very, very strong manner. As we kind of go ahead, we feel that with the increases which are planned, there is definitely an impact which happens on the demand, because there is a certain elasticity of demand in terms of what you could kind of really effect. But we feel that the effect is largely more on the economy side, which really happens more because the elasticity of demand there is more sensitive as compared to the premium and luxury products going forward. But however, we see that the consumer sentiment has really opened now, given the fact that the third wave has really diminished in terms of what people think. Monsoons have been good. Overall, the festive element in October is going on quite well. Given all this, what we feel is that I think the volume growths would kind of really get focused very strongly by us, and we are confident that we will go into a double digit definitely for the coming quarters. It might not be as high as what we have seen in Q2, but I think double digits are definitely on.
Okay. Now, Mr. Syngle, please don't get me wrong. I'm just trying to get a sense that if Asian Paints has an issue here, an issue there, then some of the smaller players in your industry as well as other industries would definitely be facing issues. One more question on the issues, please, if you will. And that is on this whole logistics and container availability and freight issues, both on the international front and on the local front as well, maybe. But how troubling is this whole international cargo movement, container availability issue? And is it persisting, or do you sense that it might ebb a little bit in a month or two? Is it possible to even predict that?
Okay, see, there is a multitude of factors at play. One is the fact that there is definitely a raw material availability crunch, given the fact that the consumption levels still continue to be high, whether it is China or whether it is US to that extent, and therefore there is inflation happening because of the crunch of the raw material availability by itself. Okay, the second area is this whole area of the this entire crisis in the shipping, which we are seeing in terms of containers, in terms of liners not keeping timelines, the whole logistics going for a toss, the time taken to really get that raw material, which is impacting inventories in terms of what you need to kind of stock and where you need to kind of stock to that extent. Now, what we've seen is that there has been a little bit of an easing in Q2. in terms of what we have seen in all this. And we are confident that as we get into Q3, definitely some improvement will happen. But I think we are seeing a larger improvement possibly in Q4, given the fact that Q3, December is a larger holiday season, which happens for the international markets to that extent, and people don't really work to that extent in that manner. So I think a larger kind of change and smoothening would be seen in Q4 as we kind of see in this. But having said that, I think the raw material crunch, the real availability, I think would be affecting the entire industry very, very strongly.
Yeah. And this may not be similar to past cycles. A reporter was making that point, Mr. Syngle, that even for a company like Asian Paints, because it's not just the pricing, but the availability of raw materials as well is so difficult that you can't compare it to the past cycles when such instances would have occurred. Would you concur, or would you believe that no, it's a passing phase and maybe come Q4 post-Christmas, things might be better?
So I think you would always live on the hope in terms of that things will definitely improve as we kind of go forward. Yes, as I said, this is unprecedented. We've not really seen this kind of multitude of problems coming at one go to that extent, which is there. But, you know, as I said, there is a little bit of a easing in some of these areas which we are seeing. And now I think as an organization, we have also adjusted to the fact that if there is a scenario of higher inventories, which we need to kind of carry for some time, because the customer is far more important, the deliveries are far more important, might as well incur there. And that is why I keep on saying, I think the view on the larger, medium to long term is far more important, rather than keep on looking at internally saying that, let me set the margins right, let me do this right to that extent, and I don't really bother about what's really happening to the overall market. I think that's the larger gratis of an industry player in terms of how we look at this entire scenario. And we're very confident this is a time in the passing, and this will pass too.
Got it. Mr. Syngle, I know I've run out of time, but a couple of questions, please, if you will. One is more Asian Paints focused. One is your assessment of how demand is, how it was in Q2 and festive season. Is it living up to the billing? Do you expect it could actually improve? Any thoughts? Because the reason I'm saying is, again, as I said, when I hear a sachet or a shampoo sachet selling company telling that rural demand is under a bit of an issue, I wonder what's happening.
What we see definitely is that when you get into the analysis of Q2, one of the big trends which we have seen is that the whole metro T1, T2, cities have done much better this time as compared to the T3, T4 cities to that extent. So I think that's a visible change in terms of what we are seeing, where the trajectory of growth has been much higher in terms of the bigger cities overall to that extent. And that is also reflecting in the premium and the luxury products in terms of the way they have kind of overall grown. But having said that, what we are also seeing that it's not that the T3, T4 cities have done poorly. It is only that the relative demand between the T1, T2 and the T3, 4 has been a little bit lower to that extent. But otherwise, I think in our scenario, we've seen even T3, T4 have done well, but relatively, as I said, the bigger cities have done well. The second area is that the real estate has really picked up. We see construction activity, which is on, and that has also given a propellant to the overall growth as we see it, given the fact that the projects in the institutional business has been pretty good. So what we very clearly see in Q2, we have seen newer demand. It is not only just a pent-up demand, because it was only the month of May which was largely affected because of the lockdowns. June, we really kind of recovered strongly to that extent to kind of cater to some pent-up demand which was there. So I think July, August and September, all 3 months we have witnessed very strong double-digit volume growth in all the 3 months to that extent, which is indicative of the fact that there is good demand in the market. And starting October, we are seeing very good trends in terms of the retail, the festive markets, in terms of what it is kind of really happening. As I said, consumer sentiment has really opened and people are definitely spending. Monsoons have been good. So overall, going forward, we see a lot of new demand. We see a lot of construction activity. We see infrastructure spending, which is going to happen. And overall, we feel that I think the demand sentiment is going to be pretty good. And even the rural cities, our anticipation is that they would do well, given the fact that monsoons have been good and the agrarian economy is bound to be good as we kind of look forward.
Inshallah, as they say. I had one more question, but I don't want to press my luck on the time, Mr. Syngle. Really appreciate you taking the time out. We'll save that question for the next quarter. Have a great festive season to you and everybody at home and in Asian Paints family.
Thank you, Neeraj, and wishing you and your channel the best.
Thank you so much, sir. Viewers, thanks for tuning in.